So trying to figure out the difference between, say, the Walmart Target customer who we're hearing is being really pinched by inflation and doesn't have money left over, at least as much, to spend on things like clothes and food, and perhaps the Sonos customer who you expect, I guess, at least revenues to be flat into 2023. How is this economic environment affecting sales patterns?
Well, you saw we kind of took an adjustment in June in terms of where things had really changed in our trajectory. But the exciting thing is they've stabilized from there. And so we were able to deliver the quarter, as you mentioned. And so we've seen it really stabilize. We've seen a great response to our new product, the Sub Mini. So that's been tracking ahead of our sales. So we're actually feeling pretty good about where we are today. And I think it's exactly like you said, John. We appeal to a little more of that premium customer, but it's attainable, right? Our products are in the $200 to $800 range. So it's still attainable for people, but it is a little more premium.
What's your approach to discounting here in Q4? I keep hearing that that's going to be key to moving these inventories, that a lot of consumers, even on the higher end, are feeling some debt fatigue and might not spend through the whole season. What are you prepared to do there?
So our products are so different than most products in the category. They last for so long. Our Sub has been out 13 years. Our products last for 10 years. So we don't feel that same urgency to clear out products the way many retailers or many manufacturers do. So we're pretty patient through this period. The good news is, because of the inventory situation, we actually will run a promo this holiday period. But it's back to where we were, 3 holidays ago. The last 2 holidays, you recall, we had such intense supply chain issues, we weren't able to run a promotion. So we'll run one this holiday, but it's very controlled, and we stay within a really tight range on gross margin of 45 to 47%. And, the inventory will burn down over time. These products last for a long time, so we don't get too worried about our inventory position.
A lot of the streets looking for signs of disinflation or outright deflation.
Yep.
And a lot of times they do point to consumer electronics. Do you think you're immune to sort of that trend that year on year, sometime in the next year, you'll see prices lower than the year before?
We're already seeing prices, in terms of some of the supply chain prices, come down, right? So we've seen a bit of a whipsaw, no surprise, after chasing demand for 2 years, everybody in the supply chain. You're already starting to see that happen. And so I think the question of transitory becomes one of, what time frame are you looking at, right, as you go through it? And so definitely, we've seen shipping rates come down. We're seeing those component prices come down. So I think it is going to moderate over the next year or so. Now, look, I think for everybody, there's still a lot to work through in the supply chain, and everybody's been chasing. So people, you see broadly, have too much inventory. But as we burn that down, I think you will see those passed along, and you will see things kind of moderate.
Right. The other question I have is how levered you are to mobility. Right? You get a new house, get a new apartment, maybe you upgrade or buy new components. New York Fed had some survey work. The record low percentage of respondents who are planning to move in the next 12 months. Is that material for you?
I don't think so, because a lot of people have moved in the last couple of years. And I think what's going to happen over the next little while, and we've seen this over the last 20 years, is a lot of those people will look for ways to improve the house that they have, right? And so not everybody, when they bought a new house, went out and bought Sonos. But over the next couple of years, we think people will want to enhance the home theater experience and the sound system. And so, we see kind of steady and stabilized, as we've said in our outlook for the year, but it's pretty steady over time as people do home improvements, some people as they move in. So we don't expect that to overly impact us.
Patrick, good morning. It's Deirdre and SF. Good to see you. Amazon is reportedly making some cuts in unprofitable units that could include devices and Alexa. And I wonder if this gives you an opening. And what do you think? Have market forces sort of rectified what Sonos has previously called an anti-competitive position held by the big tech giants in this space?
It's a great question, Dee, and we definitely are zigging while others zag. So we're actually hiring people. I mentioned on the call last night we're investing in 4 new categories. And so I see a lot of people that are retrenching right now. But you also saw in a lot of that it's become so clear on something that we've talked about for a long time, which is a lot of companies have been losing a lot of money trying to get their hardware into the market, do these kind of things. We've been profitable for 4 years. We continue to be very disciplined in how we're investing. We're gaining market share right now, and I expect over this period we will continue to gain share. And we're looking at how we expand and get into new categories. So I'm super excited about the future. It's going to be, a year where we're watching it very closely, watching the consumer very closely. But as we think about the long term, we're very optimistic we can take share and get into a bunch of new categories.